I don't think I've updated my mobile number.
Keep your KYC.
Indiabulls Housing Finance reported a 44% drop in its net profit and its NPAs inched up on a sequential basis. But is this the bottom? Mr. Gagan Banga of Indiabulls Housing Finance is here to answer the same. Mr. Banga, so last time we spoke, after the MCA had filed the affidavit, you told us that the environment has improved meaningfully. The money which was stuck has started coming in. The market has become more open. But obviously that won't reflect in this quarter earnings. But going forward, do we expect your disbursements, the fresh business momentum to pick up from here on?
Hi, good morning. The disbursements, etc., have already picked up, and we've already achieved a stage where we are doing 70% of what used to be normal business in the first half of calendar 18. By the first quarter of fiscal 21, I expect us to be at 100% of what we used to do in 2018 prior to the start of the crisis, and thereon grow. So what we are currently going through is essentially taking our strategy forward of rolling our wholesale book back and continuing to grow our retail business. Wholesale loans are chunky. They would be coming back in tens and hundreds of crores, whereas retail loans will be in the handle of 20 lakh of rupees. So to achieve the same scale is a little difficult. What we've guided is that between Q3 and Q4, we will hit both the bottom of the book as well as the profits. At about north of 500 crores, I expect that to be the bottom of the profit cycle. And the book should also stabilize north of 70,000 crores. And thereon, it will grow at a rate of about 20% for the book and 16 to 18% for profits starting fiscal 21.
Okay. Mr. Banga, so is this the bottom for the NPAs as well? Because your NPAs have inched up. They went up in Q2 as well. Now as well in Q3, we've seen an inch up in gross NPAs by almost 45 basis points. So going forward, what is the outlook on the asset quality?
NPAs are generally more an outcome of the macro, and on the micro, one can definitely be marginally better, but can't be significantly better if the macro of a certain sector is poor. As far as the real estate sector is concerned, I think our book is performing by far the best amongst all real estate lenders, and we continue to be in a situation where we are proactively both recognizing as well as providing. There is bound to be a denominator effect as we reduce the wholesale book, and that will get reflected in NPAs on percentage basis. A large part of the contribution in the NPA growth of quarter 2 to quarter 3 is coming essentially because of the reduction in book. Where I expect NPAs to be stable is plus minus 50 basis points from where they are. We've been maintaining that the NPL position is not something that can be a shocker for the street and for our stakeholders. Plus minus 50 basis points from here is where I see the NPA range to be.
Okay. So, Mr. Banga, so what is the status of the commercial real estate book now? How much have you managed to bring it down? And how much were the NPAs from this particular book?
Yeah, a large part of the incremental NPAs are coming from the real estate book. The real estate book on an overall basis would have NPLs in the range of 8 to 9%, and the retail book will be around 50 to 60 basis points. I expect this 8 to 9% to inch up to around 10% in due course of time, and that is what is also reflected in the guidance that I've given of about 50 basis points plus minus on the NPL range.
Okay. Mr. Banga, the spreads in this quarter, they've come off slightly, but as the liquidity conditions have improved, so going forward, do you expect an improvement in that as well?
The incremental cost of funds have come off, which is a reflection of the reduction in MCLRs and the transmission which is being done by banks. But that said, as we change the mix and we increase the granularity of the book, we've guided that our spreads will actually stabilize at about 270 basis points. And we are still at about 296 basis points. So from a spread perspective, even though we've taken material steps to move towards greater granularization, we've still been able to maintain spreads at a level which is at least 10% higher than what we've guided. 270 basis points of spread on a longer term basis with a gearing of about 1:4, 1:5 will get us to a return on equity of around 23%. That's the steady state business. So what I'll just request is that if this business can be for Q3 and Q4 seen as a business in transition, this business has delivered 25% annualized return since its listing. And as we have detailed out in our earning deck, we had about 42, 43 quarters of steady 22% compounding in earnings. We are taking a pause of about 8 quarters to refocus the business even more towards the granular side. I think 7 of the 8 quarters are over. Within 1 more quarter, the refocus exercise will be complete. And then from first quarter fiscal 21, we should be back to growing in the high teens, the profits.
Okay. So, Mr. Banga, you did mention about your gearing, but your borrowings this quarter were down 11% on a sequential basis. So, what is the strategy ahead? What is the funding mix going to look like going forward? And what is the targeted debt to equity ratio for you going forward?
Yeah, we will eventually take the business back to 1:5 type of gearing. Currently, we are at 1:3.3 gearing levels. 1:5 will take us about 1.5 to 2 years to get back. So by end of fiscal 23, we should be back at 1:5 gearing, and by that time we would have also achieved a steady state ROE of well north of 20%. Currently, the focus is to grow the retail AUM, not necessarily grow the balance sheet. So as per the guidance, the retail AUM will, or the overall AUM starting fiscal 21, will grow at about 20%, but the balance sheet will grow in single digits at between 6 to 8%. It's balance sheet growth which brings on gearing, so gearing therefore will also grow by 6 to 8% only.
Okay, so just one last very quick question. What is the update on your fundraising plans and the buyback as well?
The fundraising plans continue in the format that we have shared with you, which is there is a higher focus on taking funds from banks on an onward lending basis, as well as for securitization. So that plan continues. We've raised close to about 16,000 crores of fresh lines in Q3, taken disbursals in the handle of 8,000 crores. So these are very consequential numbers by any standard. So that part of the business continues in normal, as I had shared with you in the previous interaction. As far as buyback is concerned, we had done a buyback of our bonds of roughly 1,000 crores towards the end of December. We have taken fresh board limits and fresh limits from the board, and we will conduct another buyback exercise of 1,000 to 1,500 crores through the course of this quarter.
All right, Mr. Banga, thank you so much for joining us, and all the best for quarters to come.
Thank you.